Someone says that, you know what, I've been preparing my credit score, building. I'm finally at 610. Can I apply for that property? What would you say?
I want us to go to Clear Score and really understand that what do we really need to know. I mean, I might also show my score right now.
Let's see.
If you want me to show you my score, please just give me a thumbs up. So today we're going to be speaking about something that's really interesting, right?
Yeah.
So now we're speaking about how to buy your first property, right? A lot of people are asking themselves that, okay, I mean, guys, I want to buy a first property, be it that it's for investment purposes or be it that it's for you to live in that property. But now, how do I position myself to purchase this first property in the market right now? Now, do you want to go on to the first point?
Buying your first property goes way before going to Property 24 or private property. When it comes to prepping, one needs to understand that how do I prep myself as an individual, or how do I prep my business to apply for this property? And that goes without saying that I need to understand my credit score. I cannot be looking at buying a property without understanding what is my credit score. And we know that the minimum score that you need to, bare minimum score that I had to say bare minimum score that one needs to get there is 600. So Lebo, someone reached out to us and said that, gents, you guys have been saying that you need to get 600 plus. So someone would say 610. Let's go for 610. 610. Someone says that, you know what, I've been preparing my credit score, building. I'm finally at 610. Can I apply for that property? What would you say?
I mean, if you're looking at 610, right?
Yeah.
610, remember we said that it's just before the bare minimum. So that means that you are a higher risk of the bank borrowing that money. That means that your credit score isn't really that good, right? I mean, it is good enough for you to get that loan. However, it's not good enough to get you a good interest rate. Now, when you're speaking about interest rate, this is where it gets fun. So say, for instance, if you had a good credit score, I mean, I remember the last time when we were in the workshop, the lady was like, I got an interest rate of 9.75. We're like, 9.75? That's prime minus 1%. And 1% is...
When was this?
That time when we had the private client meeting, and the lady was speaking about her deal. And she said that she got 9.75. I mean, when you're looking at that 9.75 as compared to somebody that has a bad credit record and is actually getting 12%, now that's bad, guys. That's bad. So I think if you are actually going to be looking at this and saying that I'm going to be purchasing a property at a credit score of 610, I think that we need to go back. Let's reevaluate and see if we are actually on the right track.
100%, man. And it does get worse, man. I've also had, I remember in one of the workshops that we hosted, you also had a situation whereby somebody being, even on our lives, somebody being charged at about 12.75. We even know a situation of you possibly being charged 14%. It does happen. Like, that's crazy. And we shouldn't take this for granted. Buying a property can literally take you a year before you even search for the property itself. What do I mean by saying that? Buying a property can take me a year before going onto the platform. I'm saying that when I'm preparing myself and I know that I'm not going for the bare minimum score, I want to really compete in a sense whereby as soon as I do that application, the banks will be fighting for me. So what I then need to do is that I need to understand how are the banks looking at people that are applying. So if I know that the bank is actually charging someone who has, let's say, around 680, a good score, and then I know that what I need to do is I need to get someone on my team who deals with this, in a sense whereby they'll be giving me a list of things that I need to be doing so that I can increase the 610 to get the best one. So I even remember for us, it took us 2 years. Before we purchased that property, it took us 2 years to prepare ourselves and to get that best rating. I know someone right now who's been working on their rating for 4 months. It's unfortunate, Lebo, that what's happening out there is that I'm getting the job, I got the job, my ideal job, and then I want to apply for a house next month.
Yeah.
I've always been told that, you know what, I always want to buy a house. I've always had that thing of owning keys and having a lease agreement on me. Forgetting that if I'm going to be buying after 1 month, what's the impact towards my payment, my monthly payment?
Yeah.
Because you can label. Here's this example right before I close from my side.
Okay.
There's a possibility that myself and Lebo can have 2 identical apartments in the same complex with the same number of rooms. So it's 2 bedroom, same complex. But Lebo is paying more than me, got 2,000 or even 1,000. It's possible. And that time we even purchased it at the same price. So if we both bought it at 700,000, however, now because I didn't take time to prepare myself, to prepare my credit, it's going to catch up with me when it comes to the monthly payments.
Now, what I want to do right now, right, is that I want us to go to ClearScore and really understand that what do we really need to know.
Yeah.
I mean, I might also show my score right now.
Let's see.
If you want me to show you my score, please just give me a thumbs up. If you want me to show you my score, please give me a thumbs up so that we can go through my credit and really see that what is wrong, what am I doing wrong, and then what can I do right.
So while Lebo's doing his credit score, we also need to understand a hard pull versus a soft pull. So now when it comes to a hard pull, it means that I purchased something that's quite heavy. So we're looking at your car and we're also looking at the thumbs are coming. They're coming, bro.
Okay, guys, so I'm on ClearScore right now. I'm on ClearScore.
Bro, when last did you check this if you're so confident?
I don't know, man. I don't know. So we're going to be looking at it together.
688.
688.
Yo.
So I'm sitting on 688.
I don't want to check mine, bro.
I'm sitting on 688 according to ClearScore right now.
Yeah.
So on my 688, right, what I want to do firstly, I want to check that what have I been doing wrong.
Sure. It says you're soaring, bro. You're soaring.
Soaring like a bird from no world. So that's 688. So the 688 that I got right now, right, what I really want to understand is that what have I been doing wrong? Now, as a property investor, firstly, let me put down this disclaimer, right? Number one, as a property investor, I'm using a lot of credit, right? So this credit that I'm actually using, I'm using it to go back to the properties that I have right now and fix them. So sometimes what does happen as a property investor is that you do have enough cash, however, you didn't really anticipate the things that you're actually going to be going in. So say for instance, right now, if you're going to be purchasing a property and you didn't realize that there was a crack that you didn't see when you were going to view the property, or when that person that was looking at your property didn't really see that. Now, that wasn't in the budget. So what would then have to happen is that we'd have to use your credit card. And now sometimes it does. I know, guys. I know. I'm guilty of this. I know sometimes we always say that try to use less than 30%. But it does happen that you need the money right now and you're going to be using your credit card. But just as long as you are going to be able to come back and use that credit card for a good purpose.
Wait, but Lebo, what informed you? Because I know with you, just for the viewers that we've never had a conversation with this about, right? And that don't know our mindset when it comes to credit.
Yeah.
You always say that a credit card is your investment card.
Yes.
And you don't use it unless if it's investment.
Yes.
Now, because of course, then you are being charged an interest on top of the amount you used. Mm-hmm. So when it comes to a project, I remember the last project that we did. Yes, we needed the contractor told us that we needed to fix. We were in the mindset that we needed to fix for 150,000, only to find out that it went for 200,000. So now there's that 50,000. In you using 50,000 of credit, what informed you that this is an investment, that you can use this 50,000?
I mean, the reason why I'm using this and this is...
Are you going to mute the numbers for YouTube, or are you going to put them?
No, I'm going to put everything on YouTube.
Okay.
I'd probably even record the screen, man, so that you can all see it. So what informs me to use my credit card or not is that if I'm able to get that money back, if I'm guaranteed sure that I'm going to be getting my money back.
Okay.
Now, looking at the events that we are hosting, I would never try and take out credit to actually host an event because I'm not really sure. I mean, now, deep down on my heart, down in my heart. No, there's a difference. Listen to this, né? Listen to this, right? So say for instance, right now, I get you. Now we need to be real, guys. Let's be real, right? If I'm saying that I want to start a business right now, and I'm going to be selling cell phones, the entrepreneur side of me is saying that I'm going to be selling.
Don't use this practical example of you host property workshops.
Yes,
yeah,
yes.
Let it hit that home. Let that hit home. Yeah.
So I'm hitting
versus the two businesses that you're doing right now.
So now with the what's this?
The flipping.
The flipping, right?
Yeah.
I'm 95% sure that I'm going to be getting my money back when I do invest in the property. I'm 95% sure that I'm going to be getting my money back. Hence, I'm using my credit card. Now, with the events, I'm 70% sure that I'm going to be getting my money back. Now, that 30%, for me, risk appetite, this is too much for me to take out and put it into an event. So that's why I'm saying that the credit that I'm actually going to be using, the events that we're hosting right now are events that we're using from our money. Yeah. Now, with the credit, that's when we can actually go back to our credit card and use that for.
I want to prove Lebo wrong. I want to prove Lebo wrong about this 70 versus 95%. I've got 95% in the workshop, right? It's 95% hope. So what I'm saying to everyone here is that after this live, please hit our link tree. There's that section whereby it talks about the workshop. So we'll be having a workshop on the 1st of April. We are calling, must we do the announcement now or later on? So what I need from you guys, right, is that there's a huge company that's coming through that we invited. And they were like, gents, thumbs up, we are coming to speak. And then we also have someone who's very influential and will be telling you after this live. So I have trust that this 70, we can push it to 100%.
Okay, so the event will be hosted in Bryanston.
Yeah.
It will be hosted in Bryanston on the 1st of April.
Yeah.
The 1st of April will be in Bryanston. Okay, so can I do this, right?
Yeah.
The first thing that I have to improve on, number one, right? It says that lower your credit use. So it says that you've been close to your credit limit 16 times in the past 6 months.
Yeah.
So I've been close to my credit limit 16 times.
So in other words, you used more than the 30% rule.
I used more than the 50% rule.
The 30% rule, people know that you shouldn't use more than 30%.
Yeah, but I used 50%, more than 50% on my credit, right? But now
how much is the credit?
Let's not go there. Let's not go there. So I used more than 50%. I used more than 50% of my credit in order for me to do the deals that I'm actually doing right now. So the first thing was that I'm using way more than what I need to be using on my credit.
Okay, please give us an average though. Is it below 20,000?
Way above 20,000.
Okay, it's fine.
For the mathematicians, it's above 20,000 multiplied by no wealth. No wealth. So that's the first thing, right? That has been bad on my side in terms of the credit use, right?
Yeah.
The second thing that I'm really doing bad is to avoid many hard searches. So lenders have viewed your credit report 2 times in the past 6 months. So now we're always speaking about the hard searches and the soft searches. So hard search that I did in the past 6 months was that we want to purchase a property, right? We did say that we actually not want, but we're purchasing a property right now, and we're in a process whereby it's going to get accepted. I mean, it has actually been accepted, but registration of the property into our name. So now, whenever you go through that, what a bond originator does is that they go to the banks physically, and then they apply on your behalf in terms of what are you doing, right? Or are you able to actually apply for that particular home? Now, if you're not able to apply for that particular loan, they'll come back with the feedback that you can't apply for the particular home. However, that's going to leave a dent on your credit score. I remember, I didn't tell Neo about this, but the last time I checked my clear score, it was like a month ago. It was actually 3 weeks in Jan, before Jan ended. And I was sitting at 702.
Sure.
I was sitting at 702 according to clear score. However, now that we have actually done this hard search, this actually decreased my credit score. So
you're at 702.
Yeah. So now
you work hard, bro.
This is where the problem is, right?
Yeah.
I want to stress this to everybody that's going to be purchasing a property. First time I actually checked, right? The first time I actually checked how much can I actually qualify for, or can I actually qualify for that property. I did it with one bond originator. And that bond originator, it wasn't a bond originator, but it was a person that was dealing specifically with bond approvals. So what she did is that they checked, or they did a hard search on me, right, for that property. Now, when they did a hard search on me for that property, this basically means that decreased my credit score. Now, I was going for that one bank. Now, what happened is that I went to the second person to actually do that for me, to do a hard check for me if I'm able to actually qualify for that property. Now, the second one got approved. Now, if you go through a bond originator, it's only going to register as one pool. Now, because I did with 2 bond originators or 2 different companies, this will actually show as 2 different pools. So this is something that I would also always like to urge to everybody that's listening to this. If you're planning on purchasing a property, whenever you're going to be purchasing a property, be it that you want to work with your bank or you don't want to work with your bank, go through a bond originator. They'll do all the pooling. However, it's only going to be registered as one pool and not 2.
But wait, I've got a problem with that, right? In a sense whereby the problem wasn't, the reason why you've got 2 hard pools in the past 6 months is that it was for that one application for the house. But then now, what happens if the bond originator went to Bank A?
Yeah.
And then Bank A accepted them. They were cool. Okay. But now Bank A had the problem with the property. Now then, isn't it going to happen whereby now this other bank will then be doing another pool because maybe they want information from their side?
Yeah, because now remember, if the first person pulls, be it that you're going to be getting accepted based on your credit score being correct or your home not being correct.
Yeah.
If it's rejected and it was already registered as a pool. Now, if you're going to the other one, it's also going to be registered as another pool. So they won't say that we won't register it as a pool, as a hard pool, because it got rejected because of the property, right?
Yeah.
If it's a pool, if they're checking, right, be it that you get accepted or you don't get accepted, that's going to actually affect your credit score.
So then the bond originator will still take the same acceptance that this individual does qualify with. We just apply.
They need to do another one.
They need to do another one.
They need to do another one because now remember, if I'm going to go for, say for instance, Bank A, right? I'm going to go for Bank A. I do a pool. I can't then take the pre-qualification or the qualification from Bank A and use the same qualification from Bank B, because now remember, the different financial institutions use their own criteria. Perfect. So if Bank A does their own pool, they're going to do their own pool and say that you're going to be, you apply, you qualify or not. If Bank B is saying that they also want to check, they are going to use their own criteria. And then that's going to determine if they accept or not accept for your property.
Perfect.
Okay, now please do the main...
The big reveal.
The big reveal.
So we did mention that on the 1st of April, right, we're hosting a property workshop. And the manner in which we host property workshop, it's in a sense whereby, as you've seen in the past, I don't know, is it 30 minutes? 30 minutes, we've been giving a whole lot of value. So we reach out to only crop of the cream people that will be giving value. Number 1, we've got Finance with K. So Finance with K will be speaking about the different types of investments when we're looking at other than property investing, and how do we look at saving, investing, and then we also be looking at property. So that's what Finance with K will be doing. She'll be speaking more on the finance side when it comes to preparing yourself. And then we've got the second speaker. The second speaker only replied yesterday, and we were supposed to give the big reveal yesterday. Unfortunately, we did mention that the Wi-Fi wasn't with us. So, Lebu, do you want to speak about the second one? Plus, Lebu has their color. Lebu has their color, man. It's like he knew.
So, with the second speaker that we're going to be having, we're going to be having someone coming through from Uber. So, OOBA Home Loans. Yeah. So, OOBA Home Loans or Uber Home Loans is a big player in the property industry. So they are bond originators. So what they do is basically what we've been speaking about right now. They are the ones that will go through and do a hard search for you for a particular property. Now, I urge everybody that is trying to purchase a property, or you want to purchase, be it that you want to purchase for investment, or be it that you want to purchase it for yourself, make sure that you do come through, because they will be actually telling us the back end about how do they actually pre-qualify you as an individual. What criteria do they go through in order for them to know that are you the right candidate, or at this point, are you able to afford a property? And if not, they are able to coach you in terms of what to do and what not to do.
I'm really excited about this one. I wish tomorrow was the 1st of April, man. And if you want to get your ticket, you can get your ticket in our bio. There's a linked tree.
Yeah,
there's a link tree, and then you can just find out more about when is the date and when is the venue. We did mention that it's in Bryanston, and unfortunately the early bird tickets are sold out. So we saw that there's a couple of people that had already just booked the early birds and they didn't buy it. So unfortunately the early bird tickets are sold out. the number that we'd like to reach, not the number that we'd like, the number that we're reaching out for is 100. Last year in our workshops, we used to host about 50 people to 60 people. And this year we told the team that we're going for a bigger venue.
Yeah.
So Lebu has already taken out his credit by securing the venue in Bryanston. And he is saying that it's more of 70% sure, but we rely on you. And we know that you can make it possible. So hashtag 100 property investors, 1st of April, we will be in Bryanston. Our whole team will be there. Later on today, we're also having another live on Instagram. This time around, we're calling our accountant. So what we do is that we call our whole team on such platforms so that we can share. Because the thing about us, it's more about how can we speak about value. We don't speak about no money down, and we don't speak about things that we've never been through. We speak about what we do, and we've tried to make it as practical as possible. As Lebu did show you his score, it's not about magic tricks. It's more about how can we come down and simplify property investing for you. So there's guys that are coming from Botswana. If you had an excuse and you're coming from KZN, there's someone who's coming from KZN, there's someone who's coming from Botswana, there's someone who's coming from Northwest. It's there's no excuse, man.
Yeah.
There's really, really no excuse. So I'd urge you that the big boys and the big girls are coming through. Make sure that you come through, or you'll see a snippet on TikTok about what happened.
So Intech is saying that our property agents welcome at the event.
Yeah,
Everybody's welcome.
Yeah.
So be it that you are an estate agent, be it that you are a property buyer, property investor, everybody is actually welcome to this particular event.
Yeah.